Hey everybody, this is Greg Gossett with Gossett Trading and Mentoring Live, and today is Friday, April 17th, 2020. We are again in the final trading day of the week and the last hour of the trading day. In my opinion, at least for me, the most valid time of the day to make my buying and selling decisions is right near the close of the market during the last hour, right in the last few minutes. And I say this because during the day, algorithms, day traders, they are controlling the price. At the end of the day, in the last hour, and particularly in the last few minutes, the large financial institutions come in. They're dealing with the most money. They have very smart people. They have the best technology, best information, and they take control of the price away from the day traders and algorithms. And I like to piggyback on the decisions they're making at the end of the day. So anyway, excuse me, thank you so much for coming by. I really do appreciate it. I always look forward to seeing everyone. I think we have such a great group, and with great comments, good observations, great poems, and it's just kind of a cool place for us to hang out during the last hour of the trading day and share some trading ideas. So thank you all so much for coming. I truly do appreciate it. Hey, Dan is here. Good to see you, Dan. Appreciate you coming. Miko25, good afternoon, everyone. Good afternoon, Miko. Miko and I had a lesson last night. It was a marathon, right, Miko? I think it was good. I felt like it was a good lesson, and we covered a lot of ground, and I think you did great. Dan says, of course, teacher of great teachers is great. Of course, teacher of great teachers is great. Well, that sounds good. Thank you, Dan. Steve. Hey, Steve Burns. Good to see you, my friend. Thank you so much for coming today. Always an honor, always a privilege to have somebody with Steve's knowledge and wisdom and experience and just wonderful results this year. Unbelievable. I mean, it's just amazing. Steve says, by the way, Steve, thank you so much for including me on your list today on Twitter. I always do appreciate that. And it's, it's just an honor to be included with some of the names that you have in that list. So thank you so much. Steve says, what a crazy overnight futures market and intraday stock market. Never a boring day in 2020. Boy, that's for sure. That is for sure. There has not been boring day in 2020. Brian, hey Greg and all. Hey Bri, good to see you, my friend. Appreciate you coming back. Proud of Brian. Brian's 18 years old. He's spending his day here learning about stocks and trading and investing. So good for you. Zach, hey Zach, good to see you, buddy. Appreciate coming by. Hope you're having a good day. Miko25 says, great lesson. I hope I did not wear you out. No, sir. No, sir. Those lessons, they fly by pretty quick. And I think you did wonderful. So, all right. Well, listen, here is the plan for today. Oh, I guess we should take a look, see what's happening. Dow Jones is up 420 points, up 1.79. NASDAQ only up 34 points here, up about 0.4%. So it's the lagging index today, and the S&P is up 44.38, about 1.5%. So the winner's the Dow. Second place on the podium is the SPY, and third place today is the NASDAQ. Interesting to see the NASDAQ with some of the big names down, but who knows? That's what makes a market, right? So, all right. So the plan for today, first of all, we're going to run the legal disclaimer. We're going to come back. We are going to take a look at my current positions, talk about when I bought them, why I bought them, what methodology I was using, what I was thinking, what the strategy was, and then most importantly, how I'm going to manage the positions moving forward. After that, some of the group has been kind enough to share their trades with us, and so I'm going to go through each one of those, and they all look like they're doing pretty good, and so we'll go through those, take a look. After that, I do like to spend a few minutes on trader psychology every day. It's very important. It is important to learn how to trade. It's important how to read charts. It's important to understand indicators and entries and exits, all that stuff. But you need to know that so that you can build a plan, make a plan. But following your plan is a whole other challenge. It's like losing weight. Okay, I'm going to run this much each day. I'm only going to eat this. Well, that's a good plan, and it will work. but following it is a whole other thing, right? Because you get emotions involved and habits involved, and it's the same with trading. You can build a great plan, but if you can't follow it, you're going to have problems being consistently profitable traders. So that's why I like to talk about it each day. Hopefully this will rub off. You'll internalize a little bit of it. It will make sense to you, and you will start following your plan. By the way, my number one piece of advice for following your plan is reduce your position size. Reduce your position size till you get down to a dollar amount where the swings either up or down don't shake you out of your trade. And if that's hey, I'm going to lose $100 on a trade and I can stay in the trade no matter what, then great. And then as you get acclimated to that, maybe you can go to 150 and then get acclimated to that. But it's an acclimation process, right? If somebody told me, hey, you got to buy 1 million shares of Apple and trade it, oh my gosh, could you imagine? Just the smallest little move, I'd be like, right? So anyway, get acclimated, start small, just get down, find a position size where you follow your plan. That's it, and then you can build up from there. So we're going to do a few minutes on that. After that, we're going to go down through my watch list. We're going to go through each stock one by one. I look for 3 requirements. I have 3 requirements that I need to have met before I enter any trade. The first requirement has a confluence or a combination of signals. I look at each indicator like MACD and RSI. I look at those as groups of buyers, and you will put yourself in the best position to have the best chance to have a profitable trade if you're in the company with as many other buyers as possible, right? Makes sense. You don't want to be the only buyer and bunches of sellers. You're not going to have very good odds for it to go up at that point, right? So I look for a combination or a confluence of indicators lining up on the charts, ideally on 2 time frames. And I just look at that as different groups of buyers lining up at the same time. So requirement number 1, confluence or combination of indicators. Requirement number 2, have to make sure you have a good risk to reward. It's very important. You can have a good setup, but depending on how close resistance is above you, depending what your parameters are, and depending on what your indicators that are telling you that maybe you don't have as much upside potential, you have less upside potential than you do to the downside, well then can't take the trade, right? But that's a personal thing. It's subjective, but whatever you're using to measure and gauge what your risk to reward is, just make sure you stick with it. Don't change around. Just stick with your plan over the long run. That is requirement number 2. Requirement number 3, just make sure you do not have too many correlated positions. You don't want 5 tech stocks. It's great if they all go up, but if they all go down together, then that's not good. You want to diversify among different industries in the stock market. And ideally, if you could throw in something outside of equities like gold or silver or oil or bonds, that would be ideal, because then you're even more diversified and less correlated. And then lastly, account heat. I have a rule. I'll never put more than 60% of my account value of my capital to work. And it doesn't have to be 60%. Don't think you always have to have 60% in the market. You just, that's my maximum. And that this year, just that one rule saved tens of thousands of dollars just using that one rule. So going to go down through the watch list one by one, look for the 3 requirements that I just discussed. I'll tick off some potentials, and then at the end of the day, as we get closer to the close, I'll try to go through those potential setups, go through them with a fine-tooth comb, look and see which ones have the most indicators lining up, compare them on different time frames, and ideally try to pick the winner at the end of the day, the best one at the end of the day. Then after the market closes, if anybody has any questions, I'm happy to answer them. If you need some clarification on anything, I'm happy to give you the clarification. I will do my best to give you the clarification you're asking for. If there's any stock symbols you'd like me to look at, please let me know. I'm happy to give you my humble opinion. And if there are some stock symbols that you would like me to take a look at before the market closes, and you think it would be helpful for you or would be helpful for the group possibly to get my opinion on them, more than happy to do that. Just please type them in the chat, put a star by it so I know that it's time sensitive, and I'll do my best to get to it. Okay, and so that's it. That is the plan for today. So if you could be so kind, I'm going to run the U.S. legal disclaimer, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, where are we at here? Okay, Marco is here. Good to see you, my friend. Always nice to have Marco here from Slovenia. Hope you're having a good night. Scatty13, hello to you. And they say hello all. Appreciate you being here. Hi, Bob. Good to see you. Hello, Greg and all. Nice to see you, Bob. Frank, hey, buddy. What's going on? Always good to see Frank the poet. Thanks for coming. Jackson is here. Hey, buddy, what's going on? Jackson is my friend from Australia, doing some great work down there. Hope you're doing well. Thanks for coming, Brian. I'm wondering if I should buy a WMT call right now that expires by the earnings. Well, I think you know what I'm going to say, Brian. I mean, I have rules that sometimes preclude me from having really good trades, but I have to look at it in the aggregate. I have to look at it in the long term. And for me, this is right up near the third ATR channel. We know that 92% of prices generally do not go higher than this. Doesn't mean it can't, and sometimes it does, but more often than not, it does not. So, do what you're going to do. Let me know, and I'll put it up on the board. But just me personally, I couldn't be buying at these levels up here. Jackson says, in a day trade on the Qs. Oh, awesome. Let us know how it works out. David, hey Dave, good to see you, my friend. Hope you're having a good day. Jackson says, bought the Qs few cents above the low, volume down so I don't wake anyone here. Oh yes, early in the morning. Well, your girlfriend will definitely appreciate that. Krista, let us know how that Q trade works out. Christopher, good to see you. Appreciate you coming from England. Hope you're having a nice evening. Frank has a poem. No one knows where the market will be. It's a financial mystery. So tune out the news and CNBC and focus on where you want to be, because nobody knows what the market will do. How you trade is up to you. Oh man, just perfect. Perfect. Let me take another crack, Frank. No one knows where the market will be. It's a financial mystery. So tune out the news and CNBC and focus on where you want to be, because nobody knows what the market will do. How you trade is up to you. Ah, it's excellent, Frank. Bravo. Thank you, sir. That's amazing. All right, well, let's get to it. Apple is down today, interestingly enough, down $8, down almost 3%, which is interesting on a day like today, but that's how it goes sometimes. I did buy Apple back here. I bought a June 18th, 2021 call on Apple at $250. Right now it's $278, so it's been a really good trade here. My trade plan for this is if we come down and close below halfway of this washout bar of this V1, here's bar 1, bar 2, washed out bar 1, close above bar 1's close. If we close below this on a weekly basis, I will go ahead, just take my loss. That's my stop on this particular trade. My profit on this is if we reject the 1 ATR channel. That will be my signal to get out. But anyway, so far, really good trade on these calls. Was happy to see Apple up $10 yesterday after the news came out about the therapeutic, but it went the opposite way today. So anyway, still happy with the trade, still doing well. Google. I did buy Google back here on the 8th of April. I bought it when we had the 520 crossover. 520 crossover, the 520 EMA crossover is a good back-tested, profitable approach for trading Google. It doesn't always win. It doesn't have a huge winning percentage or win rate, but the losses are generally fairly small and the wins can be big, and that's the key to profitable trading. So I did buy it here 1206.49. It has moved up nicely. As you know, I scale out of positions as they go my way. Did hit one profit target today, so happy for that, above where it is right now. So my trailing stop on this is going to be if the price closes below both the 5 and the 20, I'll get out of half. If the 5 actually crosses under the 20, I'll get out of the full amount. To the upside, I will continue to scale and get out if possibly we reject the 100-day moving average up here or reject the 70 RSI. So that's the plan on Google. Glad that's up today. And then world famous SPY trade. Well. Okay, in case we have some new viewers, I want to quickly go over this, but I do buy the SPY every day at the close, and I hold it overnight, take the risk overnight, sell it first thing the next morning. This is not based upon indicators or resistance levels. It just has to do with the results of this long-term backtest that shows over the years it has had a pretty decent edge. So this is based from 1993. First approach they tested was buying the SPY at the open, holding it through the day, selling it at the close. But if you use this every single day from 1993, you're actually returning negative 13.9% return on your money for all the work you did. However, if you do the opposite, which is what I do, and buy the SPY at the close, hold it overnight, take the overnight risk, sell it first thing the next morning, it returns 634.2%. Past performance is no guarantee of future results. We know that goes for any trading approach. But you can see the chart. The blue line is the buy at the close, sell the next morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a clear difference in the equity curve. Now, even though the buy in the afternoon, sell the next morning, over time it's done extremely well. Obviously, you can look at the slope of the line, but there are some major drawdowns in between, and I have run into that kind of drawdown this year for sure. 2019 was just smooth sailing. It was very profitable. This year has not been because of the situation we've had in the world. So anyway, I do take a small position size so that if I do run into a drawdown, it doesn't frustrate me enough to stop doing it, right? Usually the maximum I will take is a 10% position size in my account. Currently right now I am taking less than that. I'm taking about 1/4% because we're under the 200-day and the volatility is so high. So with that being said, take a look over here. Boy, this was a great trade. I did buy it yesterday at the close at 279.10 and got it right at the top today at 285.50. So that was a really nice overnight trade just by holding it overnight, selling it. It's below where I sold it. It's rejecting the 50-day moving average. But again, I don't factor in filters on this particular approach. I like to vary my approaches. Some have filters, some have rules. This really has no rules other than buying it at night and selling it in the morning. So I'll tell you, back here, this was pretty brutal. I have got to tell you, but I wanted to stick with it over the long run. It has had good results, and I'm glad I did because I made back a lot of the losses over this last month and a half using this approach. But it would have been insult to injury to just get frustrated and stop here and then watch this all take place. And that's why I reduced my position size so that I could stay with it, and I'm certainly glad that I did. Okay, let's take a look here. Now, here we have trades from you in the group. 5 of these are Steve Burns trades and the other 2 are different trades. So let's take a look. Steve Burns used the 520 crossover, the 520 EMA crossover on the Qs, bought it here at 196.30, and look at this beautiful trade. Just moving on up, beautiful. It looks like Steve will probably be looking for a rejection of the 70 RSI to take his profits, maybe some kind of big reversal bar to the downside, volatility bar. But congratulations, Steve. Qs, oh, back up. They were down about $1 earlier. They're up about 50 cents. So that's doing well for sure. Congratulations. Okay, Alibaba. Same a trade by Steve, 5 crossing over the 20 EMA, bought at 197.80, moved sideways, just moved up nicely. Down today, interesting, down about 1.4% today, kind of a reversal bar. So if any changes there, Steve, on anything, please let me know so I can update this. IBB having a strong day. This is the biotechs, and of course, it looks like they came out, they had some good results with some type of maybe therapeutic. So same approach here. Instead of the 520 EMA crossover, this was a 530, very similar, but just 530 instead of 520. Bought this here at 109.70, and look at this thing skyrocket. Unbelievable. It's up at 63.95, up 3% today. So just fantastic trade, Steve, for sure. Okay, Monster, again, another Steve Burns trade, 520 crossover here, move sideways, move down, then we had a huge day up, kind of been moving sideways ever since then, up a little bit today, up about 0.5%. What else do we have? We have Google. Steve bought Google with the, a couple days ago, using the 1030 SMA crossover. This is also a good back-tested crossover approach. Bought it here at 12.59, kind of break even yesterday, up today 1.37%. So congratulations, Steve. Fantastic trading, my friend. Okay. And then Bing He. Bing He, our friend from Singapore, did buy EVBG back here a couple days ago at 111.51, up 0.36% today, up to 118.62. So very proud of Bing He. Glad to see him bring in this winning trade. If there's any changes there, please let me know. And then lastly, we had Jerry buy USO, which is the tracking stock for oil. Bought it here yesterday at 428, down about 10-11 cents today, down 2.57%. On oil, we do have a double bottom here with a bullish divergence, meaning that this first move down had very deep MACD bars, which illustrate momentum. Then we rallied and had some positive momentum. Now we've come back down, getting close to testing that low, but we don't have any negative momentum. So this is generally a bullish setup. I am definitely interested in buying gold here or oil here as well. I just need a trigger first, like an under 30, over 30, or a V1, something like that. So the setups there, I just don't have the trigger. Hey, Andrea, good to see you. Nice to have Andrea here. I'm always so impressed with Andrea. I hope you're having a nice day, my friend. Andrea says, hey everyone, just getting in the car. I'll be listening. All right. Thank you for making the effort, and please drive safe, Andrea. Boss John is here. Hello, Boss John. Always good to see you from Slovenia as well. Thanks for coming. Mount Doji. I've done that before too, Andrea. Still great with just audio. Oh, thank you. Thank you, Mount Doji. Good to see you. Steve says, I am locking in profits on IBB and BABA today, and I am possibly looking at Adobe and Apple today on the 1050 crossovers. Okay, sounds good. So you're locking in IBB. Sounds good. It's way up there, so fantastic trade, Steve. All right, so let's take that one off the board. And BABA. Okay, Yeah, I'm not surprised. That's a it's a bearish reversal bar. V1 lost the 30 RSI. So nice trade there and there. I too was looking at Apple, and I too was looking at Adobe. So we'll take a look at those in a second. Okay. Hey, Kamal is here. Good to see you, Kamal. Appreciate you coming, my friend. Hope you're having a good day. Jackson said, I audio Greg regularly. Got headphones on so I don't get in trouble with the girlfriend. Okay, good, good. Probably a good move. Probably a good move. All right. So listen, before we go down through my watch list, before we start looking for some potential entries today, using our three requirements, or me using my three requirements for any trade. Number one, look for a confluence or combination of signals or indicators lining up on one time frame at least, ideally on multiple time frames. Step number two, or requirement number two, make sure we have a good risk to reward ratio, at least 2 to 1. 3 to 1, 4 to 1 is better. And number four, just make sure we have to keep in mind what positions we have. We don't want to add a whole other lot of correlated positions, and we always want to keep our eye on percentage of what capital we have at risk or what our account heat is. But before we do that, I do like to talk about trader psychology. There's some great channels out there on Twitter and Facebook that make an effort to post every day some good trading words of wisdom or some good sayings on trader psychology, or a mix of the two. And of course, our favorite is Steve Burns. He's here right now in the chat. And I just want to congratulate Steve on just an amazing trading year that he has had so far. He stayed out of all these losses, came back strong on these crossovers, and I believe yesterday, maybe even today, I'm not sure, made an all-time equity high. I mean, listen, that's better than 99.99% of every hedge fund, every mutual fund out there. I mean, that is quite an accomplishment, Steve. So anyway, just wanted to congratulate you on that, and just an awesome achievement that is. So this is from Steve Burns at New Trader Rich Traders over on Facebook. That's a fun little, if you're on Facebook, that's a good Facebook page. And then he's at S Joseph Burns on Twitter. Anyway, so here we go. Steve says, too many new traders have no signals, no system, and no plan. They rely on the randomness of their own opinions and predictions. There is no edge. Man, I mean, that sums it up by Steve Burns, swing trader, right? You're right. There are a lot of new traders that really have no plan, no system, right? No signals. They just kind of get in there, shoot from the hip, which worst thing that can happen to you if you start trading, you do that and it starts working. Then you're reinforcing these bad habits. You really need signals, you need a system, and you need a plan. I've always said, have a decent plan. It doesn't have to be the best plan in the world. It can be simple, right? Keep it simple. It doesn't have to be the most involved analytical plan. It just has to be a decent plan that keeps you in trades to the winning trades and gets you out quickly when you're wrong. They rely on randomness of their own opinions and predictions. There is no edge. Listen, this really hits home to me. They rely on randomness of their own opinions and predictions. Man, I'll tell you what. I was just discussing this with Bruce. My opinions and predictions in the market are almost never right. They're almost never right. And but at least I take my signals, right? Because I override and take price action signals. But if it was just up to me to make my trades just solely based upon my opinions, man, I would be doing bad. Luckily, I have a plan that I can follow, right? Because your opinions and predictions have no plan. People think the market's going to go down. Well, maybe the market already priced in all the bad news, right? There's a lot of people that still think the market's going to go down, and how can it possibly be up through what we've dealt with? I'm kind of one of them. I know that's kind of my bias, but the market's telling me otherwise, and it's better, I guess, not to just not argue with the market. So there is no edge in just having opinions and predictions, no matter how smart you think you are. That's the problem. People that think they're smart and are smart, they generally have the toughest time in the market because they can think it through and come up with predictions. And if the market doesn't agree with their predictions, they still think they're right. Well, you're always wrong with the markets going against you. So there is no edge in having opinions, predictions. So anyway, thank you so much, Steve. One more time. Let's listen. Too many new traders have no signals, no system, and no plan. They rely on randomness of their own opinions and predictions. There is no edge. So the takeaway there, get yourself a plan, follow the plan. The plan should be set up so that if you're wrong small. If you're right, you have the potential to be right big. So anyway, good trading words of wisdom here. And this is coming from somebody that is just literally beating the market with a stick this year. So thank you, Steve. Thanks, Greg. Yes, all-time equity highs several days this week. That's what I thought. Congrats. Jerry is here. Good to see you, Jerry. Jerry says, looking at HCA. All right. Well, listen, it's definitely in an uptrend here. You know, you can look at charts all sorts of different ways and say, hey, this is an uptrend. It will probably be going higher. The way that I look at this, here it's getting close to the third ATR channel. I know 92% of prices fail here. So for me, Jerry, this wouldn't be of interest to me just because I don't feel like there's as much upside potential as there is downside. I could be totally wrong. I often am, but that's how I have to approach each trade, right? I have to make sure using my parameters that there's a good risk to reward, and my parameters tells me that buying up here near the third ATR channel is a little overextended. But again, it does not mean it can't go up. I'll tell you what, right? Jackson says, totally agree, Greg and Steve. Frank says, remember, in the market, my opinion, and it's none of my business. I know, Frank, that's one of my very favorite things from you. 100%, I love that. Remember, in the market, my opinion is none of my business. Let's all remember that, right? When it comes to trading, my opinion is none of my business. Stick with the price action and follow your plan. All right, well, let's go through, take a look here. Okay, so Apple does have a 1050 EMA crossover. That is a good valid crossover. Let me share this with you. Let's do the back test on Apple. This is from ETF Replay. I am using this with their permission, Google and YouTube. So let's look at Apple 1050 EMA crossover. Let's run the back test, see how this plays out. 8,120.8% is the return using this approach over time. The buying hold is 7,366%. So this back test does beat just buying and holding Apple over the same time period. But the more important thing is look at the drawdown. It's only half of what the drawdown was on buying and holding. The buy and holding had an 81.8% drawdown. The drawdown on this was 50 compared to 81, and it beat. Pretty good winning percentage too, 42.4%. That's pretty good. And look at the medium win compared to the loss. It's like 7-1, right? So that is a really, really good back test. Now, that being said, I do have filters on my crossovers that do not let me take if the price is above the second ATR channel, and it is. So look, this could just go up, and if any of you are taking this mechanically without filters, fantastic. I hope it goes up for you. But you know, I have my rules. I have to be rule based. Without them, I have nothing. And the worst thing you can do is go, well, last time it was high and it still went up, so I'll take it this time. Be consistent. Have your rules, follow them, understand that they are not always going to go your way. Sometimes they will, sometimes they won't. But if you switch around all the time, you could do even worse, right? So I am going to pass on this trade because it is above the second ATR channel. And the way I look at this is, here's the third ATR channel. Okay, well, yeah, maybe we can get up to the third. We've already gone up twice and tested it. But my downside risk is going to be, you know, maybe down to here. Possibly, it's hard to say with crossovers, but the way I look at this is it does not give me a good, it doesn't give me a reward twice of what my risk is. So I'm going to pass on Apple. Now, Adobe is a little different situation. Let's look at Adobe's back test. Okay, so same back test, 1050 EMA crossover. The crossover 794.8% compared to buy and hold of 1691, so not as good as buy and hold. The drawdown is close to, not quite half, but it is much less. But even though buy and hold made more, that's still a pretty good winning percentage, and it wins so far over time. It's won 43.3% and has about a 2.5 to 1 or 2.5 win to loss factor. So so this one makes a little more sense to me. I don't like the action of today's bar. However, with the 1050 EMA crossing over, it's not above the second ATR channel. And so the risk here gives me more room to the upside, and the stop's a little closer. So, but that's my rule. If it's over the second ATR channel, I just don't take the trade, right? That's just all there is to it. Doesn't mean it can't go up. It was up there earlier today. Now it's back down, but I will go ahead, take this trade today. I'm going to be using the 2 ATR for my position size. So I'll take my maximum loss. I'll divide the value of this 2 ATR into it, and that will tell me what my maximum loss will be. Just for funsies, 3507. 3507. Right about here. It gives me about a 10% maximum loss, but that 10%, if I do hit it, will factor, because of the math, into exactly what my maximum loss would be. So you have to figure to yourself what you're comfortable with your max loss, and then I divide what the value is of the second ATR channel in there. Okay. Mount Doji says XLE. Yeah, well, that's a higher low V2, Mount Doji. I mean, we did come back into the value zone for just a second, and we bounced right up. Look at that, up 8.67% today. That's amazing. Interesting that the energy sector up is and oil is down. So I think you know what I'm going to say, Mount Doji. Yeah, it's a V2, day 1, day 2, day 3. Day 2 washes out day 1, closing above day 1's close. But for me, few things not going the right way here. We have not had any sideways motion in the value zone. We have a gap on this V2 day, and it's triggering above the 1 ATR channel. Let's look at the weekly. Weekly's had problems with that downward sloping, but anyway, if you take it, let me know. But just, you know, my opinion here, I just wouldn't, it's just a little too high for me to buy. You know, generally everybody, I like to buy in the value zone or below the value zone, not above the value zone, unless it's a crossover, and then only if it's not above the second ATR channel. Exxon, let's look at Exxon. Yeah, very similar pattern. I mean, you would think it would be, being that we just looked at the energy index, but same, came back into the value zones, bounced nicely. This one is not over the, well, let's take a look. Yeah, XLE. Okay, so XLE is a little higher than Exxon, but still for me, it doesn't fit my criteria. No sideways movement. There is a gap on the V2 day, and it's triggering above the 1 ATR channel. David, hey, what do you think about Citigroup? Well, this is very similar to what we just looked at with energy. Yes, we did come back into the value zone. I wanted to see that thing go sideways. This has just gone down and right back up, creating this V. It is a V2. We have this monster gap here. It's not too far extended over the 1 ATR channel, but at this point, you know, me personally, not telling anybody what to do, but me personally, I would not take this trade because of this gap here. But if you do end up taking it for whatever reason, please let me know. Hey Bing He, good to see Bing He. Nice trade today, buddy, on EVBG. Fantastic. Okay, took TLT 168. So you took it today? TLT. Okay. 168.80. $168.80 for Bing He. And you took that today. Okay. All right. Well, good luck with that, bud. May says, hi, Greg. SPY keeps shooting up. Should we buy now or wait till end of day? If we only knew, right? Listen, May, you know, I just have my rules, takes a lot of the stress off. And yes, I will buy this buy today at the end of the day for sure. But my plan is to buy it at the end of the day. Some days you're going to buy earlier and you're going to get a little head start. And then some days you'll buy earlier and then it will go down and you wish you would have waited till the end of the day. So I just try to take the complexity out of it. But who knows? Doesn't mean it's going to be up in 15 minutes either, right? So I'm just going to wait till the end of the day. All right, let's go down through here quickly. So Adobe is on my radar. Amazon down today. Interesting. Too high. Boeing, well. Injury to insult. I bought Boeing 2 days ago on this nice higher low V1, got stopped out. I had to follow my rules, take my loss, and it's up 13.86% today. That's trading for you, folks. I know it is very, very frustrating, but you just have to let it, it's like a duck, let the water run off your back, right? I mean, yes, of course, if I would have held it and then it would have gone up today, of course I would have been happy with doing it, but I would have also broken my rules and I would be reinforcing that breaking your rules is a good idea. So it's a bummer. It's a bummer that I had a losing trade, and it's a bummer that it whipsawed right back the other way when I was out. But such is trading. Berkshire Hathaway, don't see anything here. Looking for a return back into the value zone. Beyond Meat, nothing here. Return to the value zone. Caterpillar, we were above the value zone. We did come down. We came down and then down. Was a V1 yesterday. Pretty nice V1 yesterday, but there was no days of sideways motion, which is a bummer because it was above the value zone, came into the value zone, right smack in the middle, had a nice V1 entry, but again, it didn't fit my criteria for taking the trade. Carnival up nicely today. I do have some Carnival calls for a friend that I manage his account, so we bought those down here. These are doing really, really well, up 6.5% today. The Dow getting up near that third ATR channel, just waiting for a pullback is what I'm waiting for on the Dow. Disney up today, big gap up. Don't see any trade here, however. Etsy, look how strong Etsy is. Look at this monster trade, man. Etsy has some moves that just never stop. Anyway, for me, I need a pullback. I need to buy a dip. I'm not going to chase it at these levels. Facebook, again, overextended the way that I trade, looking for a pullback into value here. It looks like it tagged the downward sloping 50, so just need to be patient on that. Gold down big today. Gold down pretty substantially today. It is coming back. If it comes back into the value zone, that would be my cue to start looking for gold there, but not yet. I did buy gold over here when we had the 520 crossover, moved sideways, spiked down. My rules told me I had to get out of half here, but luckily I kept the other half, and I actually sold it right here at the top. So that was fortunate on that trade. Google I have here at 1206. Right now it's 1276, so 70 points. That's pretty good on Google. Again, took that with the 520 EMA crossover. Did hit one profit target today. Okay, let me take a look here. Sorry. Okay. Where am I? Okay, sorry. Goldman Sachs. Just waiting for a pullback into value. I did buy Goldman Sachs here now that I see it. Higher low V1. This was a really nice trade. Bullish engulfing bar, rejected the -1 ATR channel, and I held on to it for 3 days, about 10%, got out about right there. Home Depot. Don't see anything. IBB, big strong day up there. Looks like Steve's exiting that. Intel, looking for a pullback into value. IWM up 4% today, nothing there. Johnson & Johnson just moving up very strong. I need to look for a pullback. CarMax, big day, up 10% today, but again, looking for a pullback into value. Coca-Cola, nothing there. Lockheed Martin, huge day, up 5%, right up at the third ATR channel, too high and extended. MasterCard, big day today, but I don't see anything. I'd like to see the 5 cross under the 20 and then back over. That might be potential in the coming days or weeks. McDonald's having a very strong day, too extended. Merck, been having issues with that 200-day moving average. Finally got above it. It will be interesting to see if we can hold above or close above. Microsoft up slightly, but it's right up at the third ATR channel. Netflix down 4% today, so I guess there's some rotation out of Amazon and Netflix back into some other industries, maybe now that we're on the backside of this thing, hopefully. Nike rejected the 200, nothing. Philip Morris really building this base here, higher base, but again, looking for a pullback. PayPal. Do not see anything on PayPal. Hughes. Looks like it's closing above the third ATR channel. That is very strong. Silver down today, pretty good. I'm waiting for a pullback into the value zone. SPY. Again, we had that nice I had that overnight SPY trade here. I will be buying that at the close. Teladoc. Interesting. I'll tell you though, you know, here we have a high with tall MACD bars, then we have a pullback, we have red bars. Now we're getting to be almost just as high, but with less high MACD bars. So this in big picture to me could be potentially bearish. Bing He, bought TLT, which are bonds. Tesla, up today, but well off its highs. Twitter, slightly up. United Airlines up in the value zone. Looking for a higher low V1 or V2 here. UNG, boy, we had that big V1, big bullish engulfing bar yesterday. Rejected the 1 ATR channel, and up another 3% today. United Healthcare Group actually down today. Interesting. All right, so here's oil. I really am looking to buy oil. I like this setup. I like this double bottom with the bullish divergence, but I need a V1 or a V2 or an under 30 or an over 30. I need some kind of, hold on. I need some type of trigger to get in. VIX, boy, VIX has really been moving sideways, down 4% today. I mean, this thing has just got hammered. It's lost half of its value since it was $80, more than half of its value. But no trigger there, but the sideways motion is interesting. Verizon broke out nicely, just too high for me. Walgreens, we have a V2. We have a higher low V2 on Walgreens. Here's day 1, day 2, day 3, day 2 washes out day 1, day 3, closing above day 1's close. But day 1's bar is larger than 1 ATR to the downside, so I can't take it. Walmart, pretty extended up there, about break even. XLE, we looked at that. That's really cranking. Financials, yeah, nothing. Real estate, nothing. Utilities, I don't see anything. Healthcare, big day today, but can't buy at those levels, and Zoom. So it looks like to me, only purchase I'm going to make today is Adobe with the 1050 EMA crossover. And it's not above the second ATR channel. So that is what I am going to buy today. At the close, of course. Jerry says, I waited and took my profits on Boeing. Well, there you go, Jerry. I'm glad somebody got that. Bing, he says, Greg, Adobe has a gap resistance on 6 marks, causing me to hold back on this trade. Okay. Gotcha. So that is just Bing he's filter, which is fine, right? Mayo, do you trade ZW wheat? No, I don't, May. I don't trade commodities. Christopher says March may be worth a look. That's, oh, thank you for that clarification. Marriott. Yep. Marriott has a V2, but for me, it's the gap. That's the issue, Chris. Again, doesn't mean it can't go up, right? It's just that the rules that I have to follow. I can't with the gap, and it's a little high for me there. So what I'm going to do is I am going to queue up and I already did my numbers. So I am going to be buying Adobe at the end of the day. Boy, Apple's come back about $5. That's pretty good. All right, so Google's doing good, doing good. I'm glad to see it closing over the 200-day. That's important. And then the SPY, oh, it's moved up, hasn't it? Yep. So I'll be buying that at the end of the day as well. Geez, we're up almost 700 points. I didn't notice how this got away from me up here. Wow. Okay, so let me go over this here. Okay. Why do you want to buy Adobe at end of day and not now? May, just because that's when I do all of my purchases, right at the very end of the day. It's just a rule. It takes a lot of stress off. Sometimes buying earlier in the day, like I said, you get a head start, but other times waiting till the end of the day, you get a better price. So it just makes life easier. And again, I think the prices at the close of the day are the best and most valid prices. Let's see. So we have about 4 minutes. Okay. Anyway, nice profitable day today. I am definitely grateful for that. It's been a good week. It has definitely been a good week, and always want to be grateful and thankful for the days that you have up days, and the days that you have down days. Try to at least be positive. Try to concentrate on the things that you did right. The problem is you always concentrate on the negative things. You can put yourself into a downward spiral. You really have to counterbalance that. Concentrate, even if you have a down day or a down trade, concentrate on the right things. Even if you have a down day, go, well, at least I position size correctly, right? Like I was talking about Boeing yesterday. Boeing was a bummer. It was an all-time bummer, right? But I position size correctly. Had I not, I would have lost 3 times as much, right? I took a third of what a normal position size, because I at least used correct, formula to look at my position size based upon the volatility, and that told me to take a third less position. So, right? So try to look at some positive things as well. All right, we have a couple minutes here. I do have to do this in a couple accounts, so I'm going to just go ahead, buy this. Right, what do we have? We have a minute and a half. Okay, I guess I have enough time then to wait. All right, I'll go ahead and get it. And over here, I'll go ahead and get that as well. Okay. So that's it. We have 1 minute left in the trading week. I have a new student tonight from South Africa. So Kyle, if you're listening today, I'm really looking forward to that. And always like when I have a new student come on, and always excited to work with them. So I like when I have lessons at nighttime. Okay. So we have about 30 seconds. Just waiting for my SPY trade to go off here. Okay, that's that. So let me put Adobe over here. And Adobe, I got filled at 344.17. Okay, and again, that's because the 10 EMA crossed over the 50 EMA, right? Doesn't mean it's going to go up, right? But historically, that's a good back test. Just like the overnight SPY trade is a good back test. Doesn't mean that it wins all the time, right? We know that it hasn't won in this year, but over time it has. And over time, the 10 crossing the 50 does have an edge, and that's what we need. So I did get filled 344.17, and then the SPY. That was pretty sweet gapper on there. And then the SPY got filled at 286.64. 286.64. Bam. All right, so that's it. So the new rundown is Adobe with the 1050 EMA crossover. If it rejects the 70 RSI, I'll get out. If the price comes down and closes below both the 10 and the 50, I will sell half. If the 10 crosses under the 50, I will sell the remaining amount. If it gets up to the 70 RSI, that will be my profit target. If I have a big reversal, ugly, volatile bar, I can always use that as an escape hatch to get out of the trade before it either hits my stop to the downside or my profit target to the upside. Apple, just have the calls, the long-term calls on Apple 250. So these are doing great. The Goog, 520 EMA crossovers. This has worked out nicely. Glad to hit that one profit target today. And then of course we had the SPY trade and the new one today. So that's that. That's that. So listen, if you have any changes to any of your positions that I haven't marked down, please just type them in the chat. Let me know, and I will update them. If you have any other comments or questions, please let me know. Before I do that, I just want to quickly put in my quick daily little plug. Hope it's okay with everybody, but I just want to let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I've been trading 24 years. I have studied with some great teachers and mentors like Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams. And I do teach a class. Like I say, it's one-on-one via Skype. And I teach you everything I've learned in my 24 years. I teach you everything I've learned from all of my great teachers and mentors. And it's a pretty intense course. It's 5 sessions. Each session is, I say 2 to 3 hours, but it always goes 3 hours. So I'm going to just start saying 3 hours, right? So 5 sessions, each session's 3 hours. The format of the course is generally the first portion of the lesson, about the first half of the lesson, I teach you what I'm going to teach you for that night. Then the second half, I have you teach it back to me. I have you break down the charts. We go through all sorts of different examples, and I ask you questions, teach me back what I just taught you. And it's really intensive, and there's a lot of back and forth. And if you take this lesson, if you take this course, be ready to answer a lot of questions and to think, right? Because I try to throw zingers at you, and just to make sure you're listening to what I'm saying and understanding what I'm teaching you. So, if you have an interest, please reach out to me. You can send me an email. My email's in the description of this video. You can also send me a message on Twitter. Before I take on a new student, I do like to have a Skype call with them just to get to know them better, kind of understand more about their trading, what they're trying to achieve, what their frustrations and challenges have been. Then it's a good time for you to ask me anything about the course or any other questions that you have for me. And the Skype call is free, and I promise you there's absolutely no obligation. There's no pressure for me whatsoever. I don't like when people do that to me, but before I take on a new student, I'm sure they have questions, and I have questions for them, and I just want to make sure we're a good fit, and it's totally free. So, if you've been thinking about it, please reach out to me, email, or on Twitter, and we'll set up a time for that Skype call. And then lastly, if you like today's content, if you're finding it helpful, if it's helping you with your trading or investing or understanding things, all I would ask is that if you could just please hit the thumbs up button before you click on out of here. I would really appreciate that. So, Jackson says, thanks, Steve, for all your wonderful books and trading wisdom. Appreciate everything I've learned. Greg, just hit an equity high today. Fantastic. I sent a screenshot to you of a rare day trade. Congratulations, Jackson. Proud of you, my brother. Bing, he says, I watched an interview with a market wizard who has another view on how to use the Keltner channels. He considers price in the value zone as noise and takes trade only if it goes above the 1 ATR. Yep, people have different views of it. Right? People can use indicators all sorts of different ways. I mean, if you look at Marty Schwartz, Marty Schwartz is a market wizard, one of the best in the world, and he bases everything on fading positions if they get up to the second ATR and buying positions if they get down to the -2 ATR, right? Which is basically in direct conflict with what your market wizard is telling you, but it doesn't mean your market wizard doesn't have a good approach, right? So, as I've said many times, there's all sorts of ways to trade. Some people can trade long, some people can trade short, some people can take the opposite of everybody else's indicators, and they can all still do well. But I can understand that. I mean, you can make an argument that once it goes above the 1 ATR channel that, then you have some positive momentum. But on the other hand, the further you get away from inside the value zone, the more that rubber band starts to pull tight because you're getting further and further away from a standard deviation standpoint. Brian says, I was going to do Walmart credit spread, but it didn't fill me. Look at Brian, man. Brian's the option expert. He's doing credit spreads now. Wow. So you were selling calls and buying calls above it for the credit. Frank says, I like to widen my stops and volatility to let the trade breathe. Yeah, 100%. That's what I was talking about the other day, Frank, with Boeing, right? I mean, on Boeing, my maximum stop was 37.61 because of the big volatility, right? It was adjusting for volatility. But look at the range, 37.61. Let's go back over when things were really going just sideways. Look, 15.18, right? So your stop was about half here because the volatility was low. Over here, it's very volatile and it's double, so you give yourself double the stop loss to stay outside of noise, right, Frank? Jerry says, have a wonderful weekend, everybody. I'm out. See y'all Monday. See you, Jerry. Thanks for coming, my friend. May says, thank you so much, Greg, and have a great weekend all. You too, May. Thank you. Thank you for coming. Very nice to see you. Hope you have a safe weekend and a fun weekend. All right. I was looking at oil intraday here. Look at this big reversal that it had here on this big volume. Pretty impressive. Pretty impressive. Again, I'm just on oil. I'm really looking forward to an oil trade here. And we could possibly get a V2 on Monday. Here's day one. Day two washes out day one. Could close above day one's close here. Generally, I'm not going to take a V1 or a V2 below the 1 ATR channel, unless it's like down at the 30 RSI or something like that, or along the -30 ATR channel. But We do have this double bottom in place, close to a double bottom in place with this bullish divergence, missing right shoulder. If we look on the week, we have started to find some support down at these levels. It stopped going down. Another thing I might want to point out on oil is, you've heard me talk about RSI divergences, ATR divergences. Well, look at this bottom. We're at 3, 4, almost to the 5th ATR channel. We're not quite down here, but now we're like only 1.5. So here you're almost five ATRs deep. Here you're getting close to equaling that low, and you're only at 1.5. That's called an ATR divergence. Look at the RSI divergence. Look how deep we were on RSI right here. Here, even if we came down and tested today with my little handy dandy tool here, right? If we were there, look how much higher the RSI is here, even though we're equal over here. So here's the low, how deep it is. Here we're at the same level and how much higher it is. So RSI divergence, MACD divergence, ATR divergence. Yep. So that's why I have my eye on oil. Zach, I just got your Twitter, but it said, "Good morning, Greg. Do you have a second?" Oh, I just saw it a while ago, so I thought you just sent it, but I didn't see that, Zach. I apologize, but I just didn't see it. I got a message from Jackson and I switched over and I didn't see this. Sorry, I would have gotten back to you if I would have known. Maybe you could ask me the question now, Zach. Zach, as always, thank you very much for everything. Just so awesome to have you share, Steve. If you're still on, thank you as well. I enjoy the options book so far. Oh, good. Greg, why USO does not track the oil? Why USO does not track the oil price? Well, USO does actually track oil. It's a tracking. It's ETF of oil. United States Oil. That's what USO stands for. So it does track the price of oil, unless I'm not understanding your question. Frank says, if oil gets much lower, you may hit the real thing. Ha ha. Touche. Touche. Zach, I'm happy to, oh, you're busy man, I'll post the question in the chat. Yeah, post it in the chat, Zach. Post it in there and let's take a look at it. By the way, let's take a look here at, this is Jackson's trade he took here. Looks like a V1. Looks like down about the 5th ATR channel. Look at this trade. Unbelievable. This couldn't be an easier perfect trade, right? V1 down here at the lower channels. I can't see back here because it's a screenshot. Look at this, just up, 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 down at the close. Man, that's pretty sweet, Jackson. That is pretty sweet, I must say. Nice going. Hey, John, good to see you. Appreciate you coming back. So I did just talk about oil, John, kind of in depth, but basically have a low with deep MACD bars, have a rally with positive MACD bars, come back down, testing, getting close to testing the low, have a double bottom with a bullish MACD divergence, also have an ATR divergence, also have an RSI divergence. Over here on the weekly, I do like the weekly as well. It has found stability, just moved sideways, bump, 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 bump. We've had some up and down, but doesn't mean it can't go lower. We know that. One thing I'll tell you, I've noticed, look at all the volume that's coming in here. This is a massive amount of volume. It doesn't mean it has to go up. In my experience, when you start seeing these double bottoms on massive volume compared to over here, that's an indication to me that there's some people buying down here. Obviously some people selling too, but just over the years, I have noticed that when I see an unusual amount of buying near double bottoms that it's generally bullish. But who knows, right? Just an opinion, just an observation. Doesn't mean it has to. Greg, my question on Skype was in regards to your intraday trades. I was just curious how frequently you run through your watch list during the day, and when you do you use the 5-minute or the 39-minute? It depends. Sometimes I trade on the 39-minute. Sometimes I also trade on the 5-minute bar. Kind of depends what the market's doing that day. If the market is just going up, 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 then I can't really use a 39-minute bar because the bars take 39 minutes to form. And so I'll look intraday. If there's some wild swings in the day, then I will go to the 39 minutes. But I've had quite a few day trades this week. I had a day trade. What was it on? It was the Qs yesterday, but I think it's going to be hard to show you. I will attempt to do this. So yesterday, intraday on the daily chart, we were right here at the third ATR channel. I know the third ATR channel generally is where it's going to find some resistance. So what I did is I then went into the 39-minute bar. Let's see if I can remember where this was. Yeah, it was right here. So again, I looked at the daily and I saw the daily was stuck at the 1 ATR channel. So I went intraday, a little shorter time frame, and I saw this move. I saw this big 39-minute bar down. And then, and as you know, if I get a huge big bar down and we rally back to halfway, I generally think, we're probably going to find some resistance there. So it was on this bar that I then switched to the 5-minute chart. Let's see if I can find this actual trade. Ooh, where was it? No, it wasn't that far. Sorry guys. Okay. So that middle bar on the 39-minute, I knew it would probably find some resistance. So then I switched to the 5-minute bar, and here was my trigger when I had a V1 to the downside. My stop was a close above that high, and it went down, 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 down. When it touched the third ATR, the 100-day moving average, Zach, I just decided to buy it and cover. So it was a nice trade, only 25 minutes or so. But I guess the real answer to your question is, if the market's swinging wildly during the day, then yeah, maybe I can look for a 39-minute entry. But if it's really not, then I have to switch to a smaller time frame, like a 5-minute time frame, because the setup's set up quicker. But how often do I go through them? It just depends. It depends if I have other things going on. If I'm on the phone or something, or if the trade starts shaping up right before the podcast. Usually I just skip it because I don't want to have to try to manage it and speak at the same time. But I guess it just depends how eager you are to find a trade. If you're really eager, I guess you could just go through chart after chart after chart, look for a possible trade. But I would recommend that you try to look at least 2 time frames, look for your entry on the smaller time frame, but look at a decent setup on the higher time frame, like the 30-minute. But anyway, I hope that makes sense. It's kind of hard to explain in just a few minutes. But John says, oil confused me a lot today, also until I realized only spot markets collapse. Longer months, not down much. Yeah, that's interesting. I was having that conversation with somebody else today, John. I mean, oil out in 2021 is much, much higher than it is now. What's that indicating? Just a temporary? I mean, this is just an opinion. My opinions are wrong all the time, but, I can't imagine oil wouldn't rebound one day somehow, but who knows? David says, have a great weekend. Thank you, David. First was typo, bump in the road. Oh, Jackson, thanks, Greg. Well, had a nice tight stop. You know me, instigating a trailing stop at the top. Perfect. Zach says, that explains a lot, Greg. I was just trying to gauge how often I should go through the watch list and which bars I should use. So thank you for taking the time to walk through the cues to explain. Yeah, you're welcome, Zach, and I hope I explained it, but again, it just depends on how bad you really want to take a trade, whether things are swinging wildly. If something's just going up, 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 then the only time frame you're going to be able to grab a setup on probably is, a shorter time frame. But always make sure you look at 2 time frames, Zach. It's very important to look at 2 time frames. Try to get some confirmation. Bingy, he says, Greg, I was watching yesterday's podcast. I think your intraday trade had a stop loss above the washout bar. It did. Yeah, it did. Yep. On that particular one, yeah, it was right here. Yep. So I decided I would use the one close above the one that was near the 1 ATR channel. And anyway, it worked out well. If I'd used halfway, I would have to gone out with a small loss. But yeah, it's exactly. I shorted here, immediately went against me, then down. I saw the big, kind of waterfall bar and down here. And then when it got down here, right at the 100-day moving average, or the 105-minute average, I decided to just go ahead and cover it because it was right here at support here as well. But it was a good trade. It was not a ton, but it was, 85 cents. Not bad. Also, Zach, I have had less setups lately because I passed on a few setups that I wished I wouldn't have, but I passed on a few setups. And so everything is so kind of extended right now that I have had to go intraday a little bit more often to look for some trades. But I didn't have any today. Jackson says, Zach, when I day trade, always higher and lower time frame. Yes, 100%. Zach says 39 and 5 as well. I don't know if Jackson uses a 39. 39 is a weird number. I learned that from Kerry Lavorne. There's 390 minutes in the day, so 39-minute bars gives you just a nice flat 10 bars. That screenshot was on a 9-minute chart, but I was also referring to the 49-minute. Yeah, that's what Dr. Elder says. He likes factors of 5. If you trade on a 5, go to the 25. If you trade on the hour, go to the 5 hour. And that looks like what Jackson's doing there with the 9 and the 45. It's five times. Okay, well, listen, our friend Dr. Jorgensen has a new RV. It's beautiful. I have to share pictures with you. He is out there crisscrossing the country right now. He's got his brother along, the 2 doctors, one's MD and one's a doctor of veterinary medicine. They're out cruising around, do the bro thing. So I hope you two, if you're listening, I hope you're having a good time. Please be safe, drive safe, and I'll talk to you later, Bruce. It's a weird number. I always used it since you do. Well, that's why. Yep. All right. Well, it's a beautiful day. I'm going to grab something to eat. I'm going to go take my dog for a walk, and I'm going to get ready for my lesson tonight with Kyle from South Africa. So that will be interesting. Looking forward to that. Pedro says, thank you for sharing, Greg. I wish you all a relaxing and safe weekend. Cheers. Thank you, Pedro. Very kind of you. Very, very kind of you. Jackson says, yes, spot on. Good. All right. Well, listen, before I leave off, please go out and do something nice for somebody today. Just a smile or hello or a wave. Give somebody a call. See how they're doing. Check in with them. Let them know you're thinking about them. They may really appreciate it. So try to do something nice every day for a person. And try to do something nice every day for an animal as well. Cherry on top there. Jackson says, I'm going back to bed. Hey, come on now. We all have to go to work. All right. Listen, thank you, everybody. Hope you had a good weekend, or I hope you had a good week. I hope you have a good weekend. I hope you had a good week trading this week. I was fortunate to have a good up week, so I'm happy for that, except for Boeing. I say passive aggressively. But anyway, that's it. That's it. Take care. Hopefully we'll see you Monday, all right? Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.